What I don't think people are taking into account is that the fair value will be doubled due to the upcoming halving in a couple of months. Today, the fair worth is probably around $50. For simplicity's sake, let's just round it to 50. Equivalent value is doubled by halving. So what gives? Now you consider it. Given that the expenses of mining remain constant, half of the miners would immediately go out of business if block payouts were halved. Consequently, a price increase is necessary. According to that, the fair value is 100. Well, we'll be into what's known as crypto autumn by spring. By summer this year. Right now it's crypto summer. The parabolic madness begins with crypto fall. Bitcoin and the cryptocurrency sector as a whole have benefited from it in every way. In the last several days, by market capitalization, Bitcoin is far and by the most valuable cryptocurrency. On Monday, it hit $50,000, its highest price since December 28, 2021. The $50,000 mark is being met at a time when anticipation of the Bitcoin halving event, scheduled for April 2024, is on the rise. The spot Bitcoin ETFs have added to the market's general strength and rising bullishness. It appears that the GBTC sell-off and all of the subsequent negativity are now in the past. Bloomberg reports that for the past 10 days in a row, Bitcoin ETF inflows have outpaced GBT outflows. Actually, the inflows have been picking up speed as of late. As an example, after weeks of trading, the Bitcoin ETFs received $541.05 million last Friday, which was significantly more than anyone had anticipated. When it comes to building assets in Bitcoin, the newborn 9 are also making tremendous progress. In the first month of trading, the 9 new Bitcoin ETFs have amassed 218,192.7 Bitcoin, according to data published on Monday. Additionally, their asset holdings exceed $10 billion. The dominant cryptocurrency has benefited greatly from all of this bullish news, rising more than 17 in the last week and dominating the cryptocurrency market by 52.4. Renowned hedge fund manager Mark Yusko claims that things are only getting worse from here on out. Morgan Creek Capital Management, which Mark co-founded and now serves as managing director and chief investment officer at, provides investment advice to pension funds and affluent people. Mark often mentioned how Bitcoin-based exchange-traded products would allow access some of the $30 trillion held by wealth managers who were previously unable to invest in cryptocurrency before last month's introduction of the spot Bitcoin ETFs. Mark believes that Bitcoin investors are in for an even wilder ride ahead. What with all of the approvals, the impending halving event, and the cryptocurrency's quickly rising popularity. Clips from Mark's most recent interview with Crypto Nutshell will be presented now. If you enjoyed this video and would want to see more like it, subscribe to our channel and enable post alerts. Sending my regards. I hope you find the video entertaining. Very much in line with my expectations. My last surprise was that Vanguard, UBS, Bank of America, and Merrill Lynch essentially came out and said, no, you, our client, cannot put your own money into this approved product. That was the last little twist. To be honest, I was under the impression that this was the final hurdle that the major advisors needed to clear. Therefore, I was quite taken aback by that. In retrospect, it doesn't shock me in the least because they had a call from Ms. Warren expressing their disapproval of Gary's approval of these. We believe he ought not to have, almost forced himself to, for all intents and purposes. The courts mandated it, and he had no choice but to comply. So I didn't expect that from that angle. At first, I was under the impression that the inflows would be closer to 10 billion. More like 3 or 4 were all we had. Thus, I was quite taken aback by that. In contrast, the outcome was very close to my expectations. The incoming funds were substantial. Well, BlackRock is now worth more than $3 billion. $2 billion is the Fidelity level. They are followed closely by Bitwise and ARK, both valued at somewhat under $1 billion. I think that's fantastic. It was also anticipated that GBT will see outflows. However, I feel like that wasn't really considered when the idea of number goes up as demand increases was being considered. In addition, I was surprised to learn, though I did tweet somewhat about it, that CMA was launching a new line of futures on the same day as the ETF's approval, which was a little-known development. What this basically indicates is that opposite side is going to have a lot more short sellers. So I'm going to guess, I don't know the specifics, that some of the big wolves started amassing Bitcoin before the debut. We went from around 40,000 to that brief surge to 47 as a result of that. After the launch, they begin selling to themselves in order to ensure a steady supply. The flash crash occurred when future short sellers jumped on the bandwagon, and then everyone realized it had failed miserably. Excuse me, but what on earth are you talking about? Minutes or days aren't enough to evaluate a launch? For context, 2 of the 3, BlackRock and Fidelity, are the top 10 selling exchange-traded funds ETFs globally. I think that's awesome. The combined performance of the 9 newborns was higher than that of the entire class of 2023. I mentioned before that advisors handle $30 trillion in accounts held by financial institutions like UBS, Merrill Lynch, Raymond James, Vanguard, etc., which is a lot of money from baby boomers. I also mentioned that this year we will be bringing in at least 10 basis points of that. 30 billion then. 1% or 100 basis points is going in, which amounts to 300 billion. Also, I believe I'm correct about this. Converting all of that money into Bitcoin would be greater than Bitcoin's whole history. Some Bitcoin backers appear to be preparing for a flood to take place in the upcoming months. Recent data from on-chain analytics firm Sentiment indicates that exchanges have been experiencing a significant outflow of funds for the past month. This has led to the lowest level of Bitcoin held by all exchanges in 6 years. Recent data from the analytics company shows that the percentage of Bitcoin available on exchanges has decreased to 5.8% of all circulating cryptocurrency. Not since December 2017 has it fallen to this level. Given that there have been 2.84 million more Bitcoins added to circulation since December 2017, one could argue that it has fallen lower. According to the data, the huge withdrawal from exchanges began on January 10th, coinciding with the day the 11 spot Bitcoin ETFs were approved by the SEC. Numerous Bitcoin investors have managed to get past the GBTD sell-off and are looking forward to numerous more long-term advantages in 2024. Let's return to Mark's interview when he elaborates on his Bitcoin bull market thesis. In my opinion, 2 things occurred during this cycle. One is that I think cutting block rewards in half is a necessary condition for the halving cycle, which involves doubling the fair value. Thus, if the price remained static, miners would have difficulties. On the other hand, how about ordinals? We now have transaction fees and ordinals. Thus, I will again build up these figures, but what if we claim? So if that effect is half, then the benefit of a decrease in block rewards will be half as great, since miners can compensate in part through transaction fees. Now imagine we reduce to 75 instead of 100. In fact, I believe that is the direction we will take. You might say 75 to 80. Due to transaction fees, we will maintain it at 75 as a precaution. Assuming we agree to fork off and eliminate transaction fees and ordinals per Luke Dasher's wishes, I suppose we will receive 75. That is not going to happen, in my opinion. Therefore, ordinals appeal to me, and on-chain money is appealing to me because I hold assets on Ord. The new fair value, in my opinion, is 75. The next step is to divide by 50, after that 50 to 75. How quickly, I'm uncertain. The point is, it is irrelevant. Therefore, we obtain 75. Now it's time for the gamblers, speculators, and traders. This cycle, in my opinion, has less wiggle room. They are quite strict with Binance Voyager and Celsius. Therefore, there is just less power. Consider the preceding cycles. Suppose we increased from 2.3 to 2.6 times fair value. I'm going to assume that this time we